Hey guys, welcome back to Shark Tech channel. Today, we are going to learn 2 points. Number 1, what is a double top and bottom pattern? Number 2, how to trade the fake breakout patterns. Many traders spend a lot of time to study how to trade double top and bottom patterns in stock, currency, and other markets, but they still lose in trading. One of the main reasons of losing in trading is these traders probably get caught in a false breakouts and are trapped in losing positions. So don't be frustrated by false breakouts. Here is how to use them to your advantage. Today, I will focus on the explanation about how to use fake breakouts to trade double top and bottom patterns with a higher winning probability. So let's go to the very in-depth in the video. Number 1, what is a double top and a bottom pattern? There are 2 patterns showing on this slide. One is a bullish double bottom, the other is bearish double top. So first let's see the bullish double bottom pattern. A bullish double bottom has a W shape and is the signal for a possible bullish reversal in trend. The price movement goes this way. The first bottom is formed after a downtrend, and then the price retraces back to the neckline and heads down again to form the second bottom. The formation of this pattern is completed when the price moves back to the neckline after forming the second bottom. When the price breaks through the neckline, then the bullish trend reversal is confirmed. And then we come to see the bearish double top pattern. A bearish double top has an M shape and indicates a possible bearish reversal in trend. The price movement goes this way. The first peak is formed after a strong uptrend, and then the price retraces back to the neckline and rises again to form the second peak. The formation of this pattern is completed when the price is moved back to the neckline after forming the second peak. When the price breaks through the neckline, a bearish trend reversal is confirmed. First, we'll see bullish double bottom with a fake breakout. The red dotted line is the bottom support level. The second bottom is a fake breakout, which is a bear trap, where bears are demoralized by the bullish trend. Second, we'll come to see the bearish double top with the fake breakout. You can see the second top is a fake breakout, which is a bull trap, where bulls are getting caught in the coming bearish trend. So coming up next, let's see how to trade the fake breakout patterns. This picture shows a bullish double bottom with a fake breakout. Mainly you can buy at 3 places, A, B, and C. A is usually used by aggressive traders right after the breakout of trend line. They forecast that this is most likely a double bottom pattern and they take a test long position at A. If they are right, they will take a good profit from the trade, but it has higher risks. So don't forget to put a stop loss below the trend line or below the swing low of the second bottom. B, you may buy after the neckline breakout and place a stop loss below the neckline. C, you may buy after the price pullback of testing the neckline. This long position has lower risks and is a more conservative way of a long entry. But sometimes you might lose some trading chances. If you buy here, place a stop loss below the neckline or swing low. It's very hard to say which method is the best for you, but it is really according to your personalities. And finally, we'll see how to set the target of when to take profit. A more aggressive approach is to measure from the bottom of the pattern directly above to the neckline. And then you take this same distance and measure the height from the breakout point. And then you can get your target price. From now, we'll see some trading examples of double top and bottom patterns on chart. Here is a double bottom trading example. This double bottom formation starts from a downtrend. Trading rule number 1. Check if the indicator CCI divergence happens. Yes, it happened. Price is heading down, but the indicator CCI is rising. Trading rule number 2. Check if a fake breakout happens. Yes, it happened here. Trading rule number 3. Draw a trend line through middle peak to wait the price breakout of trend line. Yes, there is a breakout happened here. After confirmation of 3 trading rules, we could prepare to enter a test buy here, where we forecast this is most likely a double bottom pattern. Place a stop loss and measure your profit target right in here. Here is one more trading example of a double bottom. This double bottom formation starts from a downtrend. Trading rule number 1. Check if the indicator CCI divergence happens. Trading rule number 2. Check if the fake out breakup occurs. Trading rule number 3. Draw a trend line through middle peak to wait the price breakout to trend line. After confirmation of the 3 trading rules, we could prepare to enter a test buy here, put a stop loss, and then measure the profit target. You may take the second long position after the pullback and place a stop loss under the swing low. And you may use the same profit target of the first entry. The last trading example of a double bottom. Trading rule number 1. Check if the indicator CCI divergence happens. Trading rule number 2. Check if the fake breakout happened. Trading rule number 3. Draw a trend line through middle peak to wait the price breakout of trend line. The first entry. First stop. Second entry. Second stop. Your profit target. Now let's see how to trade bearish double top with a fake breakout. This is an opposite direction with a double bottom pattern. Mainly, you may sell at 3 places: A, B, and C. A is usually used by aggressive traders right after the breakout of trend line. They forecast that this is possibly a pattern of a double top and take a test short position at A. If they are right, they will take a good profit from the trade, but it has higher risks, so put a stop loss above the trend line or above the second top. B, you may sell after the neckline breakout and put a stop loss above the neckline. C, you may sell after the retracement of testing the neckline. This short position has lower risks and is a more conservative way of a short entry, but sometimes you might lose some trading chances. If you sell here, put a stop loss above the neckline or lower high. And finally, we'll see how to set the target of when to take a profit. You may measure from the top of the pattern directly below to the neckline, and then take the same distance and measure the low from the breakout point. And here is the target price. Now we are going to see some double top trading examples. Here is a double top trading example 1. This double top formation starts from an uptrend. Trading rule number 1. Check if the indicator CCI divergence happens. Yes, it happened. The price is heading up, but the indicator CCI is trending downward. Trading rule number 2. Check if a fake breakout happens. Yes, here it occurred. Trading rule number 3. Draw a trend line through middle valley to wait the trend line breakout. After confirmation of the 3 trading rules, we could prepare to enter a test sell here, where we forecast this is most likely a double top pattern and place a stop loss. We may take a second short position after the neckline breakout. We sell here and place a stop loss, and finally measure the profit target. Trading rule number 1. Check if the indicator CCI divergence happens. Trading rule number 2. Check if the fake breakout happens. Trading rule number 3. Draw a trend line through middle valley to wait the trend line breakout. Trading rule number 1. Check if the indicator CCI divergence happens. Trading rule number 2. Check if a fake breakout happens. Trading rule number 3. Draw a trend line through middle valley to wait the trend line breakout. Okay, thank you so much for watching today. If you have any questions, please send me a note. If you enjoyed this video, please hit the thumbs up button and subscribe to my channel. Thank you again and good luck, my friends. See you next time.